Hello traders, this is John Kicklighter, Chief Strategist for DailyFX.com, here with a Forex strategy video where we will focus in on the Japanese yen crosses. We have a combination of very volatile expectations for risk trends. We also have a backdrop where we have discussed a shift in monetary policy outlook for both the United States and the Eurozone. And now we are heading into the BoJ rate decision. By the time you see this, it might already be passed. But I want to look at these pairs in terms of both, or actually in all three aspects, fundamentals, technicals, and market conditions. And I want to look at all three of those elements so we can see where the opportunities lie. All right, so the first thing that I want to note is the dollar-yen. All right, one of the more interesting pairs. I actually have taken a short position on this if it breaks above 98, and when I mean breaking, I mean a close above 98, I will get out of that short. But as you can see from a purely technical basis, we have broken this long-term trend line, we've broken this trend line. It is an indication of tentative shift. Right. We have that 200-day moving average, which we have yet to cross, and that is a concern. We also have event risk, notably the BoJ rate decision, as well as a possibility of a rally in risk trends. That could also be a complicating factor for this particular pair. But we need to put this in broader context. All right, the dollar-yen is just one of the yen crosses, and there is interesting appeal to all of them. So I want to take a look at a number of things. First, I want to interpret how the dollar-yen compares to something like the euro-yen. I've talked about the euro-yen as well as the pound-yen and the Aussie-yen. Those are three of the top, although I've also explained the Kiwi-yen, CAD-yen, and Swiss-yen with regularity as well. But I want to put them in context with each other. All right. And if you're choosing which yen cross to actually trade, you can actually measure their performance from very specific, very important dates. Now, one of the more important dates that we can compare all these yen crosses to is the period in which we saw the yen crosses as a whole begin their incredible rise to their recent highs. All right, that began back in early September of last year, and you can see how they have performed since then. All right, at the very low end, you have the Aussie yen. At the upper end, we have the euro yen, and in the middle is the dollar yen. So potentially, if you're just looking for a cross-the-board yen rally, where the yen crosses decline in concert, wouldn't you want to go for the pair that is still considered to be overbought? This ranking shifts a little bit, but not necessarily the major players. When you alter the view from a benchmark of when we actually learned of the Bank of Japan's massive stimulus program that began in April, early April, about August 2nd. All right, you can see the performance since then. That announcement itself was not good for much in the way of follow-through, but we have seen a substantial skew. Once again, the euro-yen is still near the top, pound-yen as well. I like the pound-yen for the pound's individual issues. The euro has seen a little bit more strength because of the recent absolving the issues in Italy, or as best we can. The pound, however, still has a lot of interest rate speculation priced into it, so I think it itself can see a lot of pullback. Aussie yen, once again, at the very end of this spectrum, better for a potential buying of yen crosses if there is that call. All right, so this is just a very simple comparison. Let's take a look at the fundamentals behind the yen crosses. All right. So one element that we have is the relationship to risk trends. We've talked about this numerous times before. The dollar yen, as you can see here, is very sensitive, and you can see long-term strong correlation to the Nikkei 225, which is a equity index, and thereby a good measure of general risk trends. All right, just happens to be a local measure. And then we have the yen crosses sensitivity to carry trade. Right? The yields themselves are very important, and we know that they are exceptionally low on a historical basis, so much so that something like an Aussie yen, which has it's considered one of the better carry trades, but it has a very low carry trade compared to where the price is. Now, this is an affliction that most of these currency pairs has, so we need to put it in a better comparison amongst the rest of the yen crosses. All right. So what I did was I made a correlation table. The yen's correlation, the yen crosses correlation to risk trends, the Nikkei 225. All right, so as we project the direction of risk trends, and we can see that in the Nikkei. All right, we can assess which of these currency pairs is most sensitive to those risk themes. All right. Subsequently, we can also see where carry is strongest. Now, if we expect, or if we are looking for a big move to the upside in the yen crosses, we would need two things. We would look for a strong positive outlook for risk trends, right? So we would see the Nikkei 225 rally, we would see the US equity index rally. Really, all equity indexes would advance on a strong positive risk theme, right? So we would look for the currency pair that has the strongest short, medium, and long-term correlation to risk trends. As you can see here, they all have pretty good correlations, though dollar yen is very poor in its relation to this particular theme. That can actually be a boon for this particular currency pair, however, as risk trends are in flux, right, because of the uncertainties related to the U.S. Government shutdown. Alternatively, Euro yen has some very strong correlation across the board. Pound yen, similar, though it's starting to lose it over the long term. The Aussie yen and Kiwi yen recently have been very, very poor for the relationship to risk trends. So I would not necessarily be that apt to trade a Aussie yen or Kiwi yen rally or drop that is based solely on risk trends. Because you can see the short-term correlation is not very good. It will not react immediately, and if you want to see a medium-term swing, you would need a medium-term correlation. Kiwi yen's better at that, Aussie yen not so much so. Okay, so risk trends, we get that comparison. And then we look at the carry trade, because when you have an appetite for risk, you have an appetite for yield. You need to see that yield is strong and rising. All right, so if you're looking for a strong risk appetite theme, where risk appetite trends are rising, you look for a carry trade that has a high yield typically, and that yield is rising. All right, that's one of the good things about the Aussie yen. Its interest rate forecasts are rising, and rising pretty aggressively, all right, compared to all the others. So that is actually an encouraging place to be. I do think that the pound yen, however, its interest rate forecasts have, or interest rates and thereby the carry trade change, has overdone itself, and that puts it in an exposed position. So don't be fooled by that 0.08 growth. All right, Kiwi yen too has overrun its bounds a little bit, essentially calling a over extended or extreme position, and thereby a contrarian read. But if we were looking for the same situation to the opposite side, risk aversion, you'd once again want to find the currency pair that has the strongest correlation to those risk themes. And then you would want a currency pair that doesn't have a good correlation, or doesn't have a good yield. And more importantly, that yield looks like it's continuing to drop. Right? It just so happens that the dollar yen has a poor yield, and its yield is dropping over the past 3 months. That yield differential has dropped. This is based on 10-year government bond yields, by the way. And the euro yen, once again, very poor. Swiss yen, actually, you pay if you're long the yen cross, which is very unusual. Right? We don't usually expect that. So, dollar yen and euro yen, very poor, very exposed to risk trends, at least the euro yen is. So in a risk-averse world, I have a currency pair here that is overbought in a relative perspective. It has a high sensitivity to risk trends, and its yield is very poor and looking worse. All right, that provides us with a very good reading of an overbought currency from two elements. Now, on the opposite side, risk positive theme. All right, we have a high correlation across most of them, but we add to that the yield outlook. The yield outlook is looking better for the Australian dollar, though its correlation recently to the Nikkei 225 has been very poor, especially through the past week. But that can improve. All right, the relative positioning tells us that it's a very good opportunity if you want for the shorter time frame CAD yen, which is second lowest here in this measure, as well as from the April rate decision. It has a better shorter term correlation to those risk trends. All right, a very simplistic measure, but we take it to the next level. Technicals and fundamentals. Actually, technicals and fundamentals very clearly laid out here. But there's a third element, market conditions. Now I want to look at these yen crosses and something that you can do to compare the different trades. What's the potential for follow through? All right, if you had, let's say, a break of this trend line here, came up, tested it as former support, now new resistance, what's the possibility of follow through? All right, is it an easy go? Well, a good thing that you can do is look at all the other yen crosses for the relative technical positioning. If they are clearing major support levels as well, the move to the downside can be quite substantial. However, when we look at that, pound yen has broken this trend line. However, there is a more important pivot right here. I would put it around 156.50 or 156 flat. Very notable level. All right, and you can see that that could potentially be a holdup. Euro yen, similar situation. Longer term trend line, you break that and you have follow through. But for now, we're still within this general congestion period. Swiss yen, 107.50, notable pivot, have not cleared it. Right. Kiwi yen falling lower, though it doesn't necessarily have a flat level. I would say that the 80 figure has been a notable support or notable resistance, I guess, in the past. CAD yen has been falling pretty consistently, though we still have some room to run before we get to this 93 level, 92.75 level as a wedge support, so some open room there. And the Aussie yen has a notable support short term at 90.75. So what does this tell us? While the dollar yen has made a break, an attractive break at that, a lot of it having to do with the individual dollar's perspective, the rest of these currency pairs, notably the bigger ones, have not cleared their own support levels. All right? They have not cleared those levels for continuation. Alternatively, they all have some measure of congestion or range top across all of them, which can also act as a buffer for a move to the upside. Yet if all those range tops were to break at the same time in a reversal effort, it would be a good sign that is potentially a time to look for a bullish position, and looking for a confirmation from fundamentals, namely a rebound in risk trends. All right, and then we know the correlations through the price action, and Aussie yen can be one of the better ones. So on the positive side, I would be looking at something like the Aussie yen, perhaps the Kiwi yen, CAD yen. Those are good upside potentials with improved yield forecast and strong yield now, though their risk sensitivities are somewhat questionable. To the downside, the dollar yen does not has outside of even the yen spectrum has its own issues. We have the euro yen, which is the most overbought of the yen crosses and troubled on the current and on the yield perspective, and certainly sensitive to risk trends. And the pound yen, which the yield forecast for the UK overdone. All right, so you can scale up these different pairs. You can measure them against each other. And it's not just one trade. You don't have to just look at the dollar yen. You can look at all the yen crosses and find the best out of the mix. All right, you just have to be able to look for the technicals, fundamentals, and market conditions. When you have all those line up, you have a better trade on your hands. All right. So hopefully this helps you trade going forward. We'll see how it works with the BoJ rate decision, if that is market moving. Even if it's not, this is a good measure in general for how you should trade these crosses going forward. Good luck trading out there, guys, and we'll do another Forex strategy video tomorrow.